as I mentioned in the daily financial news this morning, the Psalm rule has been triggered. The unemployment rate jumped from 4.1 to 4.3. The Psalm rule has a perfect 8 for 8 recession call. And as I mentioned again in the daily excuse me, in the daily financial news, I had to talk to Mr. Dan Bird because he's the stock guy. I am not. Dan, we're here. What happened last week?
So interestingly, if you did you watch Powell's um,
I did.
Q&A session?
Absolutely.
Did you hear the question about the Psalm rule?
I did. Yeah.
And then a guy on CNBC goes, "I've been in the market for more than 20 years. I've never heard about the Psalm
Oh my
rule."
goodness.
And all of a sudden, it's a thing. Where did this come from? And I'm like, well, maybe you should be getting my newsletter.
Yeah, it's pretty wild.
I've been talking
Um,
about the Psalm rule for how long? Six
yeah,
months.
at least 6 months. Yeah.
Yeah.
Yeah, and the Psalm rule is it's important. It has a perfect track record. It talks about rate of change. And if you know anything about unemployment, like you and I've talked about for probably 2 years, unemployment usually takes the elevator up, the stairs down. So hence the rate of change is it's important. And it appears to be accelerating.
Yes. That's what I've been saying all along.
You're right. You're right.
The
So
unemployment rate, once it gets started, accelerates and goes parabolic.
yeah. So
Actually, right into the recession, which is kind of the reason the Psalm rule even works, frankly.
exactly. Exactly. One of the things that I thought was interesting, a lot of people on Wednesday were kind of trying to pontificate that the jobs report on Friday would be at least solid, if not quote unquote good. And given how weak it was and how disaster it was, I think it was pretty clear evidence that the Fed did not have Wednesday's or Friday's jobs number on Wednesday.
Yeah, I agree with that. I didn't think they normally did. I thought they got it at the same time as everyone else, but
Yeah, I have been told because I know a few folks that supported Feds in other areas. At best, they get it a day, like they get it the evening before, right? So they have
mm-hmm.
like a 12-hour head start. But I think this is just evidence because I'll say it this way: if the Fed meeting was this Wednesday versus last Wednesday, we would have had a rate cut. What do you think?
I don't think so.
Oh, really? Okay. All right.
No, I mean, even if they had it 12 hours before, they could have done a rate cut theoretically. I mean, they could do a rate cut on Monday if they want to.
No, no, I'm sorry. I didn't understand the question. What I'm saying is if we move the Fed meeting from last Wednesday to this Wednesday,
Right.
and we had Friday's data, was Friday's
Yes.
data worse or bad enough that you think a rate cut would have happened, or you think they wouldn't have done it?
I still don't think they would have done it.
Really? Okay. All right.
No, I mean, yeah, the Somme rule triggered. Yeah, it's
This
starting to
is the
ramp up.
this
I mean,
this is the fourth month in a row where the unemployment
third.
rate has risen.
But it's the third. It's the second month for the Somme.
Correct. Second, well, yeah, but again, it's
Next
been
month,
four.
next month will be three.
Okay.
But the unemployment rate is still low,
Yeah,
and
4.3.
and
Yeah,
and and Powell said that in his Q&A session
he
a
did.
number of
Couple
a
of
number of times.
couple of times. Yeah.
Yeah, a number of times. It's still low. So 4.1 to 4.3, the rate of change is a little concerning, but the rate
Okay.
is not that concerning yet.
Okay.
So no, I don't think they. Now,
Hmm.
should they? Maybe they should, but I don't. I didn't think that they would.
All right. Well, then, so let me ask this question then. So if you don't think they cut after this number, you're still calling for a September cut?
That's the next meeting, September.
Uh, I understand. So do you think they're going to cut in September?
Oh yeah, I've been saying that for a while.
Okay. So now I'm
Have
really
are you
confused.
relent? Let me ask you: Are you relenting yet? Are you still sticking with November?
Uh, it's really so. I think after Friday, I can't. I mean,
No.
I can't stay with November. No,
Right.
I mean,
Right.
no, not after. So I'll wear the shirt, say swing and a miss. I think what's interesting though is I've said, and you've heard me say this, I always think they're going to go one meeting too long and then have to go 50 basis points. I think that's going to happen. I think they're going to go 50 in September. So My
Yes,
logic was
I agree
on.
with that. I do agree with that.
So my logic was on. I just had the wrong meeting order. So
Yes.
yeah, there you
Yeah,
go.
I don't disagree with that because we're going to have another um, unemployment
Mhm.
number.
Yeah, there's 5 inflation readings between now and the next meeting and 1 jobs number.
Right.
Yeah.
And as I've been saying for a while now, and you can go back and look at this.
Oh yeah.
I said the CPI is going to be below 3 by September,
You have.
and the unemployment rate is going to be over 4.2. That's what I said. It's 4.3 already, but I said it's
Mhm.
going to be over 4.2 by September. And both of those are going to happen. So the Fed is going to um, declare victory on inflation. They basically did that last week.
Yeah. They started to take that victory lap last week. Yeah.
Right. And then they're going to pivot to jobs,
Hmm.
which they right now they're saying it's balanced. You know,
Right.
both of them are equal right now.
Mm.
But the next one they'll pivot towards jobs. Um, if the number comes in at 4.4 or 4.5, then absolutely they're going to go 50.
Yeah.
But everyone's been hoping for a rate cut because they think it's going to help stocks. But if they go 50, the market is going to, crash. I don't know if it'll crash, but
Yeah.
well,
No,
it's not going to crash, but it's going to continue down. Put
well,
it that way.
that's the
It's not
thing.
going to rally.
You have to be careful what you wish for sometimes. And just
Yeah.
because rate cuts in this last cycle sent us on this, booming market, you've got to realize that what we saw on Friday was a realization that the Fed needs to cut because a recession is here or is coming. And that's bad for company earnings. It's bad for layoffs.
Yes.
It's just bad.
Yes. Yes,
Yeah.
that's right. The market does not do well during a recession,
No.
and the market will anticipate the recession ahead of time.
Correct.
Um, so there's a number of things at work right now that are kind of opposing each other.
Yeah.
One is the presidential cycle.
Yeah.
Normally, the market goes up, and I still think that's probably going to happen. But we're going to have a really
Interesting.
bumpy, and I've been saying this for a while. We're going to have a really bumpy summer from now
Yeah.
until October. It's not going to be fun. I
Yeah.
think we will rally at the end of the year, but I think starting probably the middle of January, that's when the market's going to realize that's it, we're done.
Yeah.
All the positive catalysts are over. The recession is coming in Q2 probably,
Mm.
if not by the end of Q1.
Yep.
And after the little Santa rally we'll have right at the end of the year, January, everything will roll over, and we're going to get another year like we had in 22. That's what I think is going to happen.
Wow. Well, one of the things that I wanted to do for this conversation, because the Psalm rule has been triggered, and it's only been triggered now for the 3rd time in the last 24 years, I wanted with you to look at the stock market. The first time the Psalm rule was triggered was June of 2001, and the second time it was triggered was April of 2008. And I just wanted to look at the charts with you here and just realize how much pain might be ahead.
Okay. So I anticipated you would ask me that question.
Nice.
No, actually, you told me you were going to ask before we went live.
Yeah. I said, get the chart ready.
Right. So let's see. Is that big enough?
Yeah. If you go one more, big, there you go.
All right. So this is basically the time frame you're talking about. So it was basically 2001 till 2000. Oh, that's the whole thing. Wait. 2001, not to today. I want to go to 2009,
Yeah.
the bottom, which was in, we'll call it April.
Not taking. Didn't take.
What's going on here?
It didn't take. It stayed today.
Is that maybe because I have it monthly?
Hmm.
It's very interesting. Let's try it again. All right, so we're starting in 2001, May of 2001, right?
Mm-hmm. Yep.
And we'll go to April of 2009. There we go.
There we go. Okay.
That's it.
Yep.
Okay. So that's a weekly chart. That looks good. All right. So do you know the dates when the SOM rule triggered?
So June '01 was when the first triggered.
All right. Let me mark that one. Do a vertical line. And we'll make it blue. So June, let's see.
Right at the start of the chart.
Yeah, it's right there.
Okay.
We'll call it right there. Remember, these are weekly
Yeah.
bars, so that's the week. And
Okay. The other one was April '08.
April of '08, which is right there. And I'm actually going to go back a little further because I want to show something. That's one of the other things I want to do today is just show how technical analysis can anticipate some of this stuff.
Okay. Oh, look at that.
Yeah, that's this is 2000.
Oh,
I'm
yeah,
gonna
we
go
need
back
to.
99
There you go.
and try October of 99. That pretty much gives you the top right there.
Okay.
And hang on one more second. Let me take off the legends. Then we can see the whole thing. All right. So there we are. So these are my typical indicators in here. Um, in fact, if I switch this to a daily chart, might be this is a monthly. This might daily might be too busy. Let's just see. Yeah, it's a little too busy, but let me go back to weekly. I think weekly is a little bit better. Hmm. All right, that's good enough.
Yeah.
So let me put in those dates again. So it was June of
'01.
'01, June of '01, right there, and
April '08.
April '08, which is right there. Okay. All right. So there's the SOM rule for those two.
Yeah, and the
Um,
first thing I wanted to get into with you before you kind of help us with technical analysis is just
mhm,
how much pain from where the SOM rule triggered to the bottom
mhm,
on a
mhm.
percentage basis, and then duration was interesting.
Yes. And not only that, but also the fact that the SOM rule doesn't trigger at the top,
No, it didn't. Nope.
right?
Mm-hmm. That's
But
true. Yeah.
so what these are my typical indicators and kind of following my trend model, which we'll talk about in a minute. But the pink line, you can barely see it. That's the 5. The blue line, which is what creates the green here, that's the 21. The red line, which is what creates the red down here, that's the 50. So those are the three main ones I look at. And then the gray is the 200, which, for the long term, that's the one you want to watch. So I would typically, using my trend models, I would typically put in my initial down arrow right there. Oops. Right here.
Okay.
And my initial up arrow would be right there. And this down arrow over here would probably be right about here. And then the second one, they're pretty close to those. But just to give you an
Okay.
idea of what my trend models look like.
Right.
So the SOM rule doesn't hit at the top, doesn't trigger at the top. Mine do, or near the top, not right at the top. They'll trigger after the top,
Mm-hmm.
but fairly close to it, at least. But the SOM rule doesn't. But yes, there's a lot of pain even after the SOM rule triggers. And the SOM rule, you'll also notice, triggers on a rally.
It did both times. Yeah.
Well, the market is already selling off pretty heavily and it goes below. So here's the trend from 2003 up to 2008.
Mm-hmm.
And by the way, I'm going to bring this chart back that we showed last week.
Mm-hmm.
This is the number of days without a 2% drop.
Yep.
All right. See this big one right here, the biggest one of all of them, back to
Yeah.
1950,
Look at that.
2003 to 2008.
Hmm.
That was the longest period without a 2% drop.
Wow.
All right. So if we go back here, we got 2003 to 2008. It's right there.
Hmm.
Okay. So there's a SOM rule. Now, the recession happened. If I can remember the dates, the recession was already in progress when these triggered.
Mm-hmm.
And actually, for that, I'm going to go back to my website for anybody that's interested, breakpointtrading.net, and my free newsletter is right there. But if we look at the unemployment rate, so this goes back to 1990.
Mm-hmm.
So right here, 2001, it was
Yep.
about June. It was about June of 2001 is when that first one started. And this one here was actually November of 2007
Okay.
is when this recession started. So if we go back to this one, June of 2001 is right at the recession where it started.
Yep. Yep.
And this one over here was about 5 months after the recession had started.
Yep.
All right. So what that implies that if the SOM rule has just triggered, then theoretically we are in the recession right now.
Mm-hmm.
Right.
Right. And what happens very quickly is, at least by this, is the stock market realizes we're in a recession and suddenly starts to reevaluate stocks on an earnings and PE basis, which means there could be a lot of pain ahead.
Yes, there will be a lot of pain ahead. I have a PE chart on my website here. Price to earnings ratio. We'll look at a weekly. So there's what it looks like right now. Here's the VIX, by the way. The VIX has spiked significantly. So this is the S&P. It's just rolling on, just beginning its rollover. Has not even taken out this support line right here.
Yep.
Here's the PE ratio. It's rolling over. Here's earnings, and I drew this line in last week. So earnings, even though they're creeping up, they're actually starting to move down.
Yeah, look at that, ever so slightly. Yeah.
Ever so slightly. And it actually has a negative divergence with price. So
I'm going to guess in very short order it won't be negative
yes,
divergence.
I think we had some missed earnings this week.
Yeah, Intel was a disaster.
Intel was a disaster. Intel is pretty interesting, actually.
INTC, I think.
Yeah, I know what it is.
I know
But
you do. I wanted you to know I knew.
Oh, okay. There's Intel. Look at that. If we go back 2 years,
that is pretty ugly.
look at that. It's lower than it was. I heard somewhere where it's as low
over a
as
decade. Over a decade.
Since 1974.
Oh, 74? Oh my goodness.
Right. So what do you do? What do you do with something like that? Now, in my little meeting that I have here in my community every couple of weeks, there's a guy that said, "Oh, what should I do with Intel?" And that was way back here in June, the June timeframe. So what should I do with Intel? Because I have it in my long-term account.
Yeah.
And I said, well, it hasn't been doing well, but it doesn't really want to fall below this $30 level. So if you want to keep it and don't want to get rid of it now, what I would do is I'd put a stop in at 29,
right,
just below that.
Yep.
Remember, that was back here in June. And if it starts to move up, then move your stop up. So if it moves up, if it goes above 32, then move your stop to 32.
Right.
If it goes to 35, then move your stop to 34. And just keep doing that until it gets taken out.
Yeah.
So I saw him yesterday in my meeting.
Oh, oh no.
I said, what did you do? Did you take my advice? And he kind of sheepishly shook his head and said, no, I do what I always do. I just didn't do anything. So now it's at 21.
21 and no dividend.
And no
Dividends,
dividend. Yeah. They canceled
dividends
their
canceled.
dividend and laying off 15% of the
Yep.
workforce. So yeah, that was very
If you're
interesting.
if you're going to ask for Dan Bird's advice and you're lucky enough to get it, please implement it. He's
Yeah.
not there's I mean, come on.
I mean,
The
just
guy would have saved
how many
himself.
times have I said, have a stop? Do you have a stop?
Yeah. Stops are there. Move up your stops. I mean, folks, if you're going to get someone's opinion, execute
And you
or
get it for
don't
free.
ask.
And you
One of
get it for
yeah.
free here. Get it for
Yeah.
free here. If you get your
That's
investment
a shame.
advisor, he'll just want you to buy annuities.
Yeah, that's a shame.
All right, so let's look at the recession watch stuff
Okay.
because we remember there's three of these, and one of them is now executed,
Correct.
triggered. First one is the unemployment rate with the SOM rule. Here's the SOM rule. I have already calculated what the SOM rule is. So the July one was, so the SOM rule is kind of confusing, complicated. It's when the 3-month moving average rises by more than half a point above the lowest 3-month average over the previous 12 months. All right, kind of confusing. So what that means is you have to go back every month, 12 months,
Yep.
and find the lowest point that the 3-month average was at. And that, then you add a 0.5% to that, and that's the SOM for that month. So I've done that already for these 3 months, and I'll do it again when we get to September. So July, it was 3.6 plus a half was 4.1. And in July, we were at 4.1. In August, which is the one we just had, it was 3.65 plus a 0.5%. The SOM rule was at 4.15. We got 4.3. So in July, it was exactly equal to the SOM rule. So, arguably, you could have said it's not over the SOM rule, but you can't ignore it now.
Nope.
Definitely over 4.3. And September's reading will be 4.2. So if nothing happens with this, it'll be over.
Correct.
So we'll have 2 or 3 months in a row over the SOM rule. So recession is either already here or it's definitely coming. Now, having said that, of the ones that we looked at, and here's the recessions back here, back in 1990. And the last 3, in fact, were all at once recessions. We've talked about this before.
Yep.
Right? This one is not an all at once recession.
Meaning this is rolling recession?
This is a rolling recession, which means different parts of the economy are in recession at different times.
Correct.
Real estate has gone through a recession period. Correct. Manufacturing going through a recession period. Correct. And each one is entering those periods at different times, not all at once like it did the last 3 times.
Correct.
So I think what I think that means is we are not going to get the official word that it's a recession until next year.
Oh yeah, there's no doubt. It won't come till February or March of next year.
Yeah, so let's look at the second one. Second one is rate hikes. So rule number 2, this is we'll call this the Bird rule. The Bird rule number 1 is the SOM rule. Okay. Bird rule number 2 is the Fed cuts rates for the first time. Whenever they cut rates for the first time, we get a recession. So here's the first rate cut, recession here. First rate cut, recession. First rate cut, recession. They will cut rates in September. So it's going to be 4 to 6 months. So you calculate that out. It's around March, February, March, sometime in Q1. Might extend to beginning of Q2, perhaps. But number 2 of the 3 will execute in September. So as
That's a
of
safe
September,
safe bet.
we'll have two of the three. The third one is the inverted yield curve.
Mm-hmm.
So first we'll look at the 20-year. So these are the three inverted yield curves. You see it is not uninverted yet. So it's not when the yield curve inverts, it's when it uninverts.
Correct.
So usually, 5 or 6 months after it uninverts, we get the start of the recession. So there's the last ones. What I did was I added a new one with a shorter time frame because it makes it really clear.
Mm-hmm.
This is a 3-year, the current inverted yield curve that we're in. There's what it looks like.
Yeah, it's de-inverting at a rapid clip.
Yeah, look at the 2-year minus the 3-month. So the reason the reason the yield curve is uninverting so quickly is because the 2-year is dropping so fast.
Yep.
All right, so we could uninvert. We could potentially in September. I mean, you can see how the rate of change in the last 2 months. We theoretically could in September, or it might take one more month.
Okay.
By October, the yield curve will be uninverted.
I think
So
that's a safe bet. Yep.
calculate 5 or 6 months from there, and you get early Q2 next year. Let me show you another one that I found from, and I put this in my newsletter. This is from Real Investment Advice. So it's amazing how he kind of follows he follows the data as well, and he kind of mirrors what I've been saying. But this one goes all the way back to 1977, and I've heard people say, "Oh my God, the yield curve has been inverted for so long. It's been inverted longer than it's ever been inverted." What does that mean?
Right.
Well, first of all, that's not true. If you go look back here, how long it was inverted. Actually, it was inverted through 2 recessions
Mm-hmm.
back here. And it uninverted at the end of this recession was the beginning of a secular bull market.
Interesting.
From 1982 until 2001. It's a secular bull market.
Hmm.
So this one here, we are in a bull market right now. But he actually broke this down and looked at just the one that everybody looks at. It's the 10 minus the 2. That's this one. And you can clearly see it again. So now it goes back further than mine does.
Right.
But before every recession, the yield curve uninverts. These are the 3 that I showed.
Mm-hmm.
Actually, this one here I showed as well. And then this is the 77 one.
Yeah, I mean, I've been telling people for quite a while that they would do themselves a service to go back and look at the early 80s.
Mm-hmm.
And that should frighten people, right? The early 80s sucked from an
Right.
economic perspective. 2 nasty recessions really close together. One of them was the worst since the Great Depression at the time,
Mm-hmm.
that one in 81.
Yeah.
And yeah, I mean, there's a lot of things like look at how long it took to de-invert, and then it did, and then it went right back.
Yeah.
Oy.
Yeah. Almost immediately went right back, and then we had another recession.
Yeah. And I remember that 81 recession. That was, I think my old man was laid off for almost a year.
Right. So you know the difference between a recession and a depression.
Absolutely. Recession is when your neighbor's laid off, a depression is when you're laid off. Yep.
Exactly. So the one big difference between that is the one in 81 was at the very end of a secular bear market.
Yeah, which I think is helpful for stocks, but when you're thinking about just the economy,
Yeah.
that's where I go with this, because again, I remember as a kid just how, I mean, that's when we almost lost our home. I almost had to, we had a going away party. We were going to get foreclosed on or whatever on Monday. It was bad. It was terrible.
Mm-hmm. Yep. I mean, I've been saying, and I will continue to say that when the recession hits, it'll be short and shallow.
Okay.
So I don't think it's going to be nearly as bad as this one.
Yeah, let's hope not. Yeah, one of the things that I got a question about
But
today.
But it's going to feel bad because
Oh,
we've
yeah.
been in such a booming economy for so long.
Oh, exactly. It's going to feel terrible. Yeah, no doubt.
And if you think about it, if you look back to, the 2008 period, which, felt like the whole world was collapsing.
Yeah, I remember watching CNBC, just watching everything crater. I remember.
Right. But, 2008 was what, 16 years ago.
Yeah.
So there's a lot of people that are in their mid 30s
Hmm.
that were probably still in high school and not even thinking about the economy
Oh, yeah, for sure. Yeah,
at that point.
absolutely.
So let's look at a couple of other things. There was a comment last week on your channel about um, the Fed rate. And the person said, of course, you know that the Fed rate has nothing to do with other rates.
Yeah.
So I thought that was interesting. I hadn't really thought of that before. And I love hearing things like that from subscribers because it makes me
Mhm.
think a
Yeah, it
little
makes
bit.
us think. Yeah.
And of course, I create a chart when that
Yeah, of
happens.
course you do. That's why I'm chuckling.
So here's the Fed rate with the
Mortgage.
10-year yield, the 2-year yield, and the 30-year mortgage.
Yep.
So my comment on the channel was I looked at it and you're right, they're not equal, but they do rhyme.
Correct. Yeah.
So you can see the Fed rate is the green one here,
Yep.
and it takes longer to roll over. The 2-year and the 10-year and then the 30-year is the blue one down here. They run fairly well in concert with each other.
Hmm.
And they roll over actually before the Fed rate does.
Right.
But when things start to go up, they're probably more in tune. So the Fed
Yeah.
rate starts to go up
I
roughly around the same time that those start to go up.
yeah, I get that comment a lot. I think it might even be the same person cutting and pasting. I don't know that, but I remember those comments. And it's true that the 2 year and the 30-year mortgage really do kind of go in lockstep far better than the Fed rate. But when you zoom
Yes.
out like this, it's like, yeah, well, the Fed rate is the ultra short end, so there's certainly some similarities.
Yeah. The Fed rate takes longer.
Yeah,
So it's lagging. It's lagging the other rates. So in that sense, that's true.
yeah. The reason it lags is they generally touch it every 6 weeks, right? The two
Right.
tens and 30s, they're changing daily.
Yes, that's right. I mean, you can even see it in the chart how quickly
Yeah,
they change.
exactly.
Yeah, and the 2-year in particular, the
Yeah,
gray
the
one,
two.
that's the 2-year. You can see how fast the 2-year changes up and down and up and down.
Yep.
The 10-year is a little more or a little less up and down, and
Yeah,
then
more
the
measured.
30-year is less, and then the Fed rate is much less.
Yeah, I think it makes sense.
So they rhyme. They're not
Hmm.
exact. They do rhyme.
No, never said to be. Yeah, and again, I think that's something I said all the time. Everybody's like, "Hey, the Fed cut rates. Why didn't mortgage rates go down?" I'm like, "Dude, that rate cut was priced in weeks ago."
Right.
Yeah,
Yeah.
very cool.
And I've had a chart on here for the 33-year mortgage rates for a while, and I actually put the 10-year right with it.
There you go.
So you
Yeah,
can see how the 10 and the 30 just really go in concert with each other. The Fed rate is the gray area in the background. That kind of shows it too.
yeah, I like it. Well, I knew there was one company I wanted to ask you about. I know we're running out of time. I want to make sure we talk about Apple.
Yep. We will talk about Apple. Um, First, though,
Okay.
I want to show a couple of charts
Oh, sure.
and show why understanding how to read charts can be very important. So I have something on my website called Trend Models that I created, and I really like them, and they're getting really positive feedback too. But it basically shows the trend of all of these things. So here's the indexes, and it shows when the short term, medium term, and long term change. And if it's highlighted, it was during this week it changed.
Mm.
So Bitcoin went down this week, bonds went up. In fact, bonds went up a lot. If you look at the bond chart, look at that.
Screamed.
Now,
Yeah.
I've been saying for a while, way back, I said bonds are going to do well this year.
Yep.
And you can see, so here, these are the short term, medium term, and long term right here. The pink is the short, the medium is the blue, and the dark red is the long term. So you see they both triggered right here. The long term triggered right here. So even if you got in here at this one, these pink ones will oscillate back and forth. So sometimes you can't necessarily, you can start with those, but you got to watch the long, medium and longer. But
Mm-hmm.
any one of these pink ones you could get in and you would have done really well. I think bonds are going to continue to go up, but like anything else, they never go up in a straight line.
Right.
So sectors, the same thing. Trend model for sectors. You can see communication services. These are the internet stocks. Technology rolled over this week.
Mm.
Utilities went up, which is a defensive area. Energy went down this week. So it gives you a sense for that. But the Magnificent Seven, which is where Apple is, take a look at this one.
Oh, have some red.
Yeah, every one of the short-term ones are red. And now you can see just this week,
A lot more
four of
medium.
them turned red as well on the medium term.
Yeah.
So everything is rolling over. And we can look at Apple right here. So there's the long-term uptrend for Apple, and you'll see the difference between what Apple looks like and what the rest of them look like. So yes, it got a short-term down signal right there. It could potentially get an up signal soon if it starts to move, even just a day or two moves up.
Mm.
But the medium term back here is probably the one really to watch. And Apple actually hung in there pretty well last
Okay.
week. But if we look at Microsoft,
Oh,
Microsoft is not looking good.
crumbled.
We look at Tesla. Tesla's
Mm.
just starting to go down. So all of these, along with the market, peaking. Netflix is starting to go down. AMD looks terrible. SMCI had been going sideways, but it's rolling over significantly now. And then, of course, NVIDIA got a down signal right here, and it's starting to roll over as well. So the thing about Apple, and was there something in particular you wanted?
Just Warren Buffett liquidated
Oh yeah,
roughly
that's
half
right.
his
Warren Buffett.
position.
Yeah. They just, but that he didn't come out. He didn't sell it last week. He sold it two
No,
quarters
no,
ago.
he's probably
The
been
report.
selling little bit at a time. Yeah.
Yeah, but I think it's like half his position he sold.
No, no, what's crazy thing about Warren Buffett is he's sitting on a record amount of cash,
Right.
277 billion
Yeah.
as we head into a recession. Good old
Yeah.
Uncle Buffett's going to go shopping.
No kidding. Absolutely. Palantir is one that I've been waiting, and it wouldn't go down with the other ones, but now it's starting. Now it's starting to go down. So with that backdrop, with Apple actually is hanging in there pretty well. Apple has a new phone cycle coming up
Yeah, an
in the
AI
in the
phone cycle that's
in the
supposed to be.
fall. It's an AI phone cycle. The big question is, are people really going to buy it now for AI, or are they going to wait for AI?
I don't know.
In other words, is AI that important for people that have everything they need in their phone today?
Mhm.
Don't know. And Apple, I think, once the initial rollout gets done, they're going to start a subscription service for AI.
Hmm,
I think
probably,
they've
yeah.
already they've already said that actually.
Okay.
So we'll see. But Apple's the one that's actually hung in there pretty well. But let's use that same idea. So this trend model idea that I'm showing you here,
Mhm.
let's use that same idea and look at something that happened a couple of weeks ago, which is CrowdStrike and Microsoft.
Oh, yes, CrowdStrike. Oh my goodness. Oh my gosh.
So here's CrowdStrike. Here's the Microsoft outage right here.
Yeah.
So you might say, in fact, let me do something. I
While you
downloaded this
set,
app.
yeah, while you set this up, I don't know if you heard this, but I reported it on my daily financial news. Delta is suing CrowdStrike and
Mm-hmm,
Microsoft for half a
mm-hmm.
billion dollars in
I heard
damages.
that.
Woo!
Yep, I heard that. Um, it'll be interesting to see how that goes.
Yeah, I have no idea. I have no
It
idea if they
won't.
have a legal claim, but wow.
Well, it won't go to trial, but the question would be, it's not like it's not like you don't have other choices. You
Yeah.
could have gone to Google Cloud. You could go to Oracle Cloud if you want
Yeah.
to. The big question is Does Oracle Cloud use CrowdStrike too?
Nah, I have no idea.
That's the big question. But let's take a look at the trend model, and look at the charts to see if we could have seen some warnings on this before that outage happened. And most people would say, well, nobody knew the outage was coming.
Mm.
How would you get out of CrowdStrike when nobody would know?
Okay.
And on top of that, a lot of people would say, when CrowdStrike got down here to 250, would say, you know what? CrowdStrike is a good company. Maybe that's the time to buy it at 250.
A lot of people did.
A lot of people did. So what would technical analysis tell us? And what would the trend models say? Okay. Well, if we just look at this section here, and then we'll go back to the past and look at what happened back here. But we just look at this up here. This is the MACD. So that's a momentum indicator. It had already crossed over. So there's your first warning, but CrowdStrike was just going sideways. So that's not really a big warning. The next one was right here when it crossed over the zero line. So you see that the blue line right there, the dark line, crossing over, see the pink line is the zero line.
Yep, I see it.
It goes across horizontally. So when that crosses over the zero line, that is indicating a downtrend has begun. All right, so that happened here. You can see it back here. I circled them where it crossed down and then back up again. And you can see down here, the medium term signals are right there and the short term signals are there. So where that crosses is kind of right in between those two. See that?
Yep.
So this one is crossed here. It has not only has it not crossed back above it yet,
yeah, it's accelerating.
It's accelerating. All right. This here is starting to move back up a little bit. So that might offer some hope, but it's not giving you a buy signal yet. But anyway, here's the first warning sign. Second warning sign was down here. Now this is the money flow. So it's a short-term money flow over a long-term money flow. And when the short-term starts to cross over the long-term, that means people are starting to get out. That happened way before this outage. People are starting to get out right there. This is the longer-term MACD momentum indicator. It happened right here, coincidentally, the exact same time as my short-term trend indicator. People were getting out here even before the outage happened, right?
Yep.
The medium-term indicator happened here, and that was after the outage. But then when do you get back in? Do you just try to catch a falling knife and say, it's a good company, it's gone too far, it's at 250, I'm buying? Well, I wouldn't be doing that. Not if it hasn't given me any up signals yet. Right?
It just screams to me, I'm on a slide and going down. That's all it tells me.
Yeah, you don't know when, you don't know where it's going to stop. Now, if you're on a long-term horizon, then sure, buy it at 250 and hold it for 10 years. That could be a really good strategy.
Maybe.
But you've got to probably go through a lot of pain once you do that.
I would think so, yeah.
So there's CrowdStrike. Here's Microsoft. So here's the outage for Microsoft right there. Here's the first indicator right there, MACD crossing over. So that was here. But none of these have really crossed yet. That was just the first warning. And to me, what I do is when I see that, I say, okay, there's a warning. I better start watching. I better pay attention now because things are starting to move. Well, here's my first short-term down signal. Here's the longer-term MACD right there. Both of those are before the outage, right?
Yep.
Here's where it crossed the zero line, which means a downtrend is in progress. That was after the outage, but Microsoft actually had bounced and people might have been saying, well, that was it. We're over. It's going back up. But it never got above the 21-day moving average and started down again, which created a lower high. And then it continued down. Here's the medium term, which was after the outage. All right. And it too is just continuing down and accelerating. So that's not ready to get back in. So that's all related to the outage, but we can take the same concept and look at NVIDIA. So NVIDIA, way back here, this was at the high. That was the first warning right there, right? Right at the high. And that was a huge down day for NVIDIA. Actually drew in the lower lows and lower highs in here too. So NVIDIA started down. It crossed the zero line right there. So it's confirming that it's in a downtrend. Um, the money flow indicator was down here. So that went down to that point, and then it started back up again. It got up here and couldn't get above this high. So it created a lower high right there. So that was another warning sign. And then my short-term indicator happened right there, which is on my trend model. If you're following that, and I recommend you look at that just after the close at night and just see what's changed
Yep.
that day or for that week. If you had done nothing more than follow that, that would have been the signal to get out right there.
Yep.
And that's where I got out about 118.
Now, when you
Right.
say out, just so the audience, because I'm sure we're
I
going to
am
get
in
question,
cash. I am in cash on everything.
everything, no stocks.
Nothing at all.
Okay, cool.
No stocks, no options, no nothing right now. I may go short and buy some short stuff, but I think we're going to probably get a relief rally out of this market, and I'll show you why in a second. But there's how you can use the same idea, same concept on any stock, on any index, on anything else that you're in. The problem or the challenge is, go back to CrowdStrike. What about back here? You might say, well, there's a short-term down signal right there, but then it gave an up signal right there. There's a medium-term down. Here's a medium-term up. So if I got out here and got back in here, well, probably would have just broken even. And if I got out here and got back in here, I actually would have been getting in at a higher price when I got out.
Mm-hmm.
So why is that really helping me? Well, that's typically what happens. And if you look at this part up here is actually more important when it crosses the zero line. You can see right here, the pink one crossed the blue there and went back up right there, but this one never crossed the zero line. There's the zero line right there. So this was just noise. So like I always say, never look at just one indicator, look at everything in combination. So down here, this had not crossed the zero line. It was not confirming a downtrend yet. So you didn't need to get out for that one. But this will happen. You can get out and then all of a sudden have to get right back in. This is what, 6 weeks later, get right back in. But I would rather do that, get back in at the same price I got out, or even a little bit higher than I got out, than have to go through this pain right here.
Right.
Right.
Yep.
Just follow the signals and, go with what they do, what they say. And in fact, when this signal triggered, it had not gone below the zero line yet. That happened just 2 days later. So that confirmed that signal was a good one, but then it just turned around and came back up. But I would rather do that than, take all that pain.
Yeah, I like it.
All right. I think there was one more thing I wanted to show you. So these indicators, I think this is really great. I watch them every day and after the close, and I actually update them every day.
Right.
So just by updating them, I see what's moving and what's not. What's going. Oh, I know what I want to show. The head and shoulders, and why I think that we might bounce. So IBD just gave a market in correction on Friday. Finally, here's the S&P, and I put the head and shoulders pattern. Now I don't know if we talked about it or if I did it on the one that I did on my own.
Okay.
But I had drawn these in. I drew in the left shoulder. I drew in the head. This had come down probably right down to here.
Yeah.
Which is right about where, well, we didn't know yet where the neckline was, because it has to come down and then start back up again before you know where the neckline is. And I think it had already started that. So it probably was right there, just starting back up. And I said at the time, we can now draw a neckline in. And I drew this little curve here before it ever got there.
I remember that episode. Yeah.
Yep. I said, it looks to me like we could potentially make a head and shoulders pattern. And if we do, if it does go up there and gets rejected, then here's the target, 52.50. And that's where I think we're going to. And we could get there fairly quickly.
It could happen Monday morning.
Yeah, it could happen. That's right. It could happen Monday, and it could rebound the same day like it did Friday. And then last week I put in, because somebody else mentioned to me when I said the 5250, they said, that's really interesting because that's exactly the 61.8% Fibonacci level.
Mm.
I said, oh, I hadn't even thought about that. So I drew in the Fibonacci, and sure enough, it's not exactly 5250, but it's in that neighborhood.
Yeah, it's pretty close.
That one. And if you look at where this open gap is here, and this significant support level happens to be the 38.2 Fibonacci level.
Hmm.
And if you look at where the shoulders are on this head and shoulders pattern, it's the 23.6 Fibonacci level. So it's amazing how these things work. So if this happens, we come down here, and that could happen fairly quickly, then I think we're going to get a relief rally. We're going to start back up again, and we potentially could make another right shoulder. So if we go down here and we bounce back up to, say, 5350, back up in this area, then I've already drawn in the red line, the red left shoulder. The head stays the same. But if that happens, and there's no saying that it will, I don't know if it will, then the target then is the 2021 high.
Oh, wow. Okay.
And I'm not saying that's what's going to happen. I'm just saying the patterns are setting up that way.
Right.
And the reason that all of these things work is because everyone else looks at them too.
Yep.
You'll notice the S&P is below the zero line up here, so it's confirmed the downtrend. Yep. It's got the high there. It's got a lower high. It's a lower low. We've now made a lower low.
Yep.
So if it bounces from down here, we'll go back up here. We'll make another lower high. And that's how downtrends operate.
There you go. This is going to be fun, folks. Mr. Dan Bird comes back every week. Many of you have asked. He is in cash. He is maybe setting up to shorting the market, but we don't know. We'll talk to him each and every week. One more time, show the website.
Sure. I actually tried to short it a couple of weeks, last week or a week or so ago, and actually put it on portfolios page. I went to the SQQQ, which is a triple short the Qs. But we had that big rebound, if you remember that.
I do.
We had a huge sell-off and then a huge rebound the next day. And so I got stopped out, and I actually put what my stop was actually 895, and it blew through it and stopped out at 878. But I made 3.3% in about a week, which is fine for me. Yeah, if I had stayed in it, I'd be making even more. But right now, I want to watch for that bounce, and I'll probably get back in once we bounce.
Very, very cool. And the website, folks, is breakpointtrading.net. Get the newsletter, sign up, get the yearly subscription. You won't regret it.
Newsletter's right there. Pretty much everything I just talked about is on the newsletter except for the cartoons.
Yeah, you got to get the cartoons. Buddy, you're amazing. I look forward to talking to you next week.
Here's the haves, the have-nots, and the Fed that have got a clue.
Haven't had a clue. Very cool, man. Take care of yourself.
All right. Have a good weekend.
Thanks. You too.